The way we're looking at it is the concentrated FANG trade we're now looking at it as a broader opportunity in technology, not just the FANG stocks. Yes.
So more broadly, is your main takeaway at the moment, John, that despite the recent pullback we've seen in volatility, that you're still attracted to U.S. equities?
Yes, we are. I think what we're seeing is a much more volatile market environment, and but our sense is from an economic perspective that we're going to be stronger for longer in this period, but we're going to have the volatility is definitely increased here and will continue to increase going forward.
What's the single biggest risk to your view that U.S. equities are attractive? Trade, rates, valuations, an economic slowdown?
Well, I think there's many factors. One, of course, is the hopefully the gridlock here in Congress is positive because this market's been striving on the good fiscal policies. So we want that to continue. So the debate on that going forward will increase volatility. Obviously, what the Fed does, interest rate rise, is also a factor that will be a factor in volatility. The geopolitical risk is a factor as well. The trade negotiation that's going on is also a factor, and as you know, it's every headline that's really increasing volatility here. So, it's not certain, but we don't think valuations are extremely high here, and obviously earnings have been positive. So we're looking at a more positive market going forward, a bit of a sideways market, but I wouldn't let this volatility or panic, force a sell off at this point.
So we talked about tech stocks, but where else then would you see opportunities to invest further in the market right now?
Well, I think in the broader tech area, as I mentioned, I think the large tech companies may have an issue with some regulation going forward. That's been debated a lot. We're seeing, financials. We remain positive on financials going forward in here. Obviously, the banks and there could be positive going forward. We've seen commercial loans increase in here. We're looking at healthcare as well in here, so there is opportunities in there.
What do you think has held back those bank stocks that you just mentioned? They've, in a relative sense compared to the S&P 500, given up all of their post-Trump election gains that they initially saw. What's been holding them back?
I think the flat yield curve in here kind of held them back a bit in here. So that's been a factor. Obviously, with a normal type of yield curve, bank stocks will do better in that environment. So that's held them back. But the economy continues to improve. So I think looking at them from that point of view, that should be positive going forward here.